Welcome back to U.S. Farm Report. Before we get into the demand side, Dan, we talked about, looking at weather and how that started to really fuel the market on Thursday as we saw an updated look at the drought monitor. But over the next few weeks, will it be future forecasts? What is the trade going to be watching?
Yeah, they're going to be trading the 11 to 15 day. It's a very volatile forecast, if you will, but that's what they're looking at. Will the weather pattern change, and does rain come in time to save the crop? And that's really key. But, traders are also looking abroad. We've got dryness across Northern Europe, the Urals and new lands, the spring wheat areas of Russia. I've got an Indian monsoon that's sputtering and not doing very well. And then the Australian Bureau of Meteorology came out this morning and gave them a very high probability, 80% of drought forthcoming because of El Nino. So it's not only U.S., there's a lot of hot spots, if you can say that we all need to be watching in terms of world crop production.
Well, not only on the supply side, but also the demand side. And you look at demand today, specifically when you look at corn and soybeans here, we've been talking about we have a demand problem. Ben, do you think that is the case?
Well, so this has been what's driving the market for the last month and a half, especially on the corn side. When we look at export potential, we've got this new competition. And it's not new, but it's certainly, I think now the rest of the world is kind of waking up, or, non-traders are waking up to this notion that Brazil is becoming a major competitor and has been a major competitor in soybeans, but is now becoming a competitor in corn as well in the global market. And that's going to change our seasonalities as we look forward over the next years, decades plus. And so that competition, plus China creating some new trade agreements with countries like Brazil and Argentina now, that's continuing to play into this diversification away from U.S. products, and that's lowering our demand for export potential. If we look at the ethanol market, right now we're trading anywhere between 40 to 50 million bushels below where we need to be to hit USDA's current targets, or at least that's my calculation. Can we catch up over the summer month? Yeah, we could. It's going to take a lot more driving, and I think some of the macroeconomic concerns that are kind of starting to trickle out through the economy are causing people to maybe backstep some planned vacations and other things that would increase driving. So we do have a demand side. I think it's more pronounced on the corn side than the soybean side, or at least the oil seed market. But yes, demand continues to be a concern, and that's what's drove our market lower the last couple of months.
Dan, even those mainstays of demand, I mean, you look at Mexico, and they're going now starting to get source some of theirs from Brazil. We have the ongoing GMO corn issue now that we're hearing that's ramping up too. I mean, are you concerned about Mexico?
No, I am. I think Mexico has even bought a cargo or two of Russian wheat because the prices got cheap enough to allow the import. So we are seeing world trade, or world buyers go to where the cheapest denomination is of a grain, which is Russian wheat and Brazilian corn. Those are the key ingredients. But I would also remind everybody that Argentinian soy meal is now at a record level in terms of tightness relative to the U.S. Gulf. We're going to see a very good soy meal market for export coming up. So I'm not as bearish, if you will, on the soy complex, to Ben's point, but I do believe we still have this issue with Brazilian corn and Russian wheat going forward.
Well, the demand problems in grains, are we seeing any demand problems when it comes to protein? You look at how high we have these cattle prices right now. Are we seeing that impact demand on that front?
So I do think that we've seen some robust demand in the protein sector. If there's one real hot spot, I think, for livestock producers, it's that as prices have increased at the grocery store, whatever the reason might be, tight cattle or market ready cattle supplies, or increases in labor, transportation, packaging, whatever the reason for the high prices, consumers continue to buy them and have been buying them. We're seeing a little bit of softness now, especially in some of the higher protein cuts. But that's been very robust even at these higher price levels. So that's the beef side. On the cattle side, we're going to continue to see herd liquidation. The drought that we've been talking about on the grain side is going to continue to push market-ready cattle into the market. That's going to create a bigger hole as we look down the road and send these prices even a little bit higher. So there's upward potential on the cattle side. There's also downside risk. I'm an economist, a university economist, so I always have to talk about the downside risk too. But certainly some upside potential. And I think if you're a producer of both beef and pork, you're sitting there saying, hey, our demand, at least domestic and even international demand, has remained rather strong. Chinese demand could be a concern here in the next couple of weeks, but domestic demand seems to be hanging in there.
Well, we're going to take a deep dive into pork demand as World Pork Expo next week. So we'll save that for then. But Dan and Ben, thank you so much for joining us this weekend. We appreciate it. Let's take a quick break, and then we're off to the land of Oz. That's American Countryside next.